Alright, traders, welcome to chapter 2. This is where we start connecting the dots between price action and market structure. So, today we're going to talk about trend lines and fibs. Okay, so those are Fibonacci's, and how they help us understand when a market is actually trending or just consolidating. Number one, for every up move or for any move to start, whether it's bullish or bearish, the market needs an impulse, okay, which is this one here. The market needs an impulse. Basically, that is your first sharp move, of which is this one I've drawn here, whether in an uptrend or in a downtrend. All right. Its characteristics: it should be sharp. All right. It should be fast. Be easy for you to see that it's moving to the upside quite fast, and it will be strong, basing on the direction, either to the upside like I said or to the downside. These moves then, either up or down, are called our fast impulse or our fast mono wave. Alright, a mono wave, either to the downside or to the upside. Are called mono waves. What mono waves really mean, it just means fast wave or one wave, alright? So if you ask me, there's no way you're going to see a market just moving like this. It will be rare, but most scenarios you'll find that this impulse evolves into a sequence of 3 or 5 waves. What do I mean by that? You find that the market is moving like this, correct? Small, goes to the upside. This is a sequence of 3. That is 1, 2, then 3. Okay? This as well is regarded as a mono wave, as long as price is moving fast in one direction. Or it could be in 5 waves, which is 1, correction, 2, correction, like that. So this is 1, this is 2, this is 3, this is 4, and this is the 5th wave. Alright? So all these are regarded as mono waves, as long as it takes a bigger price factor than time factor. Alright? I will explain that in a while, don't worry about it. But just understand that it can be divided into subsequences of maybe one wave, a longer one, or 1, 2, 3, or it can be 1, 2, 3, 4, 5. Alright? Same goes for the downtrend. It could be one single wave, one mono wave, or it could be divided into 3 waves, which is 1, 2, and 3, or it could be divided into 5 waves, alright, which is 1, 2, 3, 4, then a 5th wave to the downside, alright. All these are also regarded as mono waves, or our first impulse to the downside. As long as it is sharp, it is fast. Even though it's correcting, it should correct a little bit and then goes to the downside, alright, sharply. So that is also called a mono wave. So characteristics, it should be fast, like we said, it should be sharp, it should be easy to see, and it should be strong based on the direction it's headed to. So when several mono waves combine or happen, they form a pattern. What I mean is we have a mono wave, correction, another one, correction, another one. These form the pattern of 5 smaller waves, but in a bigger degree, going to the upside. So this is still considered as a one or a mono wave or an impulse. Alright? Even though it is in a sequence of 1, 2, 3, 4, 5, it is still a mono wave. Alright? This is key to actually remember. Okay? Impulses, which is this first move here, are price factor based, and corrections are time factor based. Okay. So what I mean by this is that impulses are price factor based, meaning they move up. So what I mean by impulses are price factor based is that the move up is supposed to be sharp and it's supposed to take a little time. Alright? If this move up, let's say it was maybe 12 hours, alright? The correction basically is supposed to take a longer time than this impulse. If this was 12 hours, I'll just change this to black. Let's say this was 12 hours of price action moving to the upside, okay? Then I'm expecting this correction to be not less than 12 hours. To be exact, it's supposed to be 13 hours plus, okay? If it is less than this, then we do not regard this as a correction, then we're still in our mono wave, alright? That's the difference. If it goes consolidating or correcting for probably 24 hours, okay, or even more, then we regard this as a correction. Then that's when we mark this first wave as our mono wave, alright? You cannot mark our mono wave before a correction happens, okay? So after our first impulse, usually we wait for the correction to be longer in time than the impulse. Okay? Please understand this. Our impulse is supposed to take less time than the correction. If the impulse took 12 hours to complete, then our correction is supposed to take at least 13 hours plus. 24 hours, it could even be weeks. It's okay. As long as we have that, then we mark this as our mono wave. So what we'll be waiting for usually is a correction for longer hours than the impulse. Once it's done, then we are looking for another move up, okay? Of which this we are going to be talking about it in the next sessions, but I will make sure I show you an example of a trade that I took today based on this. And this is usually going to be our third leg, all right, to the upside, and this is actually our wave concept trading pattern. This is what we trade. So first move up is not our concern. This actually shows us the direction. The consolidation confirms that this move up is coming. And in our next chapters, we are going to talk more deeply about how far this is supposed to go and how this is a good trade to take rather than trying to catch this fast move up to the upside. So recap, corrections usually they take a very long time than the impulse. So if the impulse took probably, let's say 1 day, at least the correction is supposed to take 2 days plus. All right, 2 days, 3 days, it could be a week. Then for another push up. All right, and we'll look at how corrections can be into 3 waves or also 5 waves, or it could even take more than that. All right, but we are going to look at it as well in the next chapter. So this is the same for the uptrend and the downtrend. So basically, we want this move down to be sharp and fast. It should take a smaller time compared to this correction here. So if this was also 1 day, we expect this to be 2 days plus. It could be a week, it could be 7 days, it could be 10 days, it could be 15 days. As long as it takes longer, then we should be looking for another push to the downside. And this is usually our trend. All right. So let's go to a live example. I'll show you, and then we're going to talk about how to draw the trend lines. So basically, this is the market structure part and price action part, and then I'm going to talk about how we draw the trend lines. So here is an example of a trade that I took today. I'm sorry I still have the notification on, but this is what we're talking about. The first move to the upside is always sharp and it's clear to us, alright? But this move cannot be named a mono wave or the first impulse before a correction. If you can see clearly, this move, where it started from here up to here, the time it took, it's smaller than the time this took to correct. I hope you can see it. Alright? So this is what I've been saying. For an impulse, it should take less time. For a correction, it should take a longer time. And it shouldn't take a lot of pips. So price action should be just messy consolidating or just correcting for a shorter time. I mean, in small amount of pips, right? So it should be consolidating in small amount of pips, all right? So once this correction was done, hopefully you can see how price went to the upside. So this is our third wave, and as I've been telling you, this is the first wave we don't trade. We wait for this to confirm our first mono wave, and this is usually the trade that we take. Okay. Now that you've got structure, let's talk about trend lines. One of the most powerful tools in technical analysis. You'll always draw a trend line between two impulses. Keep that in mind. We need two impulses to be able to identify a trend. Without two impulses, then you are in a consolidation. Let's say if the market had only this and then it's consolidating, then you have no trend because price is stuck between this low and this high. Unless or until price breaks this or price came down like this, consolidated breaks, then you have a trend. But unless this happens, then you do not have a trend. Alright? So this is how we should connect our trend line. At the bottom of the first impulse and at the start of the second impulse. Okay? At the top and at the start of the second impulse. So basically what we do is we take a line or a bar and just draw it like that. And remember, your trend line is supposed to be always on the right side, not on the left side. Okay? This should come like that. Alright? It shouldn't come here like this. This is not a trend line, and this for sure is not a trend line. Alright? So it should be at the right. So the very first use of a trend line, firstly, is we use trend lines to identify mono waves, okay, or our fast impulses. If you can track where the first impulse starts from, and then where the second one starts from as well, then you are able to identify that, okay, this is our first impulse or our first mono wave, all right? Same to the downside. If you can track the first move to the downside, the sharp move, the correction, then another sharp move, then you understand that this is our first impulse or our first mono wave, all right? And a valid trend line, it requires at least three waves, okay, of which we have one here, two, and then three. Same, one, two, then three, all right? If at all we get a correction like this and then an up move as well, then our trend line has to shift from this to this level. So we have to draw it like that. Alright? Same happens to the downtrend. If we get a correction, another push down, then we move our trend line to this and connect to this one. As long as this breaks like that, then we know that now our 1, 2, 3, 4, 5 is now our one overall mono wave. So this becomes our first impulse. The break of the trend line doesn't mean that price is reversing. Okay, this basically means that this is the start of a correction before another push to the downside. All right, let's get deeper into that. So let's talk about how to spot an end of a mono wave and the start of a correction using trend lines. Okay, just as a recap, we understand that this is a mono wave. Okay, that's a mono wave, and this is also a mono wave, and this is as well a mono wave. And we've talked that if a mono wave an impulse can be subdivided into sequences of 1, 2, 3, 4, 5. Okay, and this can be classified as our one mono wave. Okay, and at some point we are going to label this as a structure as 1A or W. All these can be labeled as, let me just write it here, 1A or W. Okay, any of this. You can either call it 1, you can call it A, or you can call it W. But this, we're going to talk about it briefly or in depth in the next chapters. So understanding this, I'll just clear this, okay? So understanding that for a trend line to make sense, we're supposed to take at least two impulses, all right, to identify the trend. So we are going to draw from here up to here, okay? Once another impulse happens and a correction and another impulse, we're going to now go from here to here, all right? So whenever we see a break of the trend line, a correction, then a move down, then that means this trend line has been broken, and it means that now the market is in a correction wave. And remember what we said, if this is our first mono wave or our 1AW, okay, then this means that this wave should it should take less time than this correction now. Alright? So that means this trend line has been broken. So basically we need this consolidation or this correction to take a longer time than this impulse. Okay? Which we have now named as our first mono wave. Okay? Remember we said multiple mono waves in sequences of 1, 2, 3 or 1, 2, 3, 4, 5 can mean that this is one single mono wave, as long as the market is moving sharply to the upside. Okay, which is the same for the downtrend. Sharp move down, correction, sharp move. Then our first trend line is here. Then another sharp move, correction, sharp move. Then we take our correction. Our trend line from this to that. Okay, when this breaks, then we understand that now we are in a correction phase, but not necessarily a change of structure. Okay, unless this comes strongly to the upside and gives us the fast mono wave as well, like that, in a sharp move, then it corrects for a very long time, then we want this to go to the upside again. But this we are going to also talk about it later on as we move on, alright? But understand that a break of the trend line doesn't mean necessarily that the market has changed the structure, okay? So in brief, this is how we use the trend line to spot our mono waves and our trend, and understanding when the trend has ended, and understanding that, okay, since we've broken this structure here, basically we are now in a correction phase, and this correction should take a longer time than this mono wave. All right, I hope this makes I hope you understand this. All right. For the Fibonacci, I'm just going to put it in the next chapter, which is going to be the third chapter. And because this video is now long, I want these videos to be 20 minutes each. Okay, at least, maximum. So thank you. See you in the next chapter.